Dun-dun-dun-dun. All right, good morning, everyone. Let's get going. All right, obviously we know U.S. stocks had a great first quarter. We finished the quarter at all-time highs on the S&P. Yesterday was the first session in the States since the beginning of the second quarter. Obviously, we had a quite small pullback, almost a 0.5%, but just some slightly negative data, a little bit weaker than expected out of the U.S. and China. But there was live volume really that traded in the market on the back of that. In Asia, we saw markets mostly mixed. I think Aussie was up a little bit, but Nikkei was a big underperformer, obviously on the back of a strengthening yen. We've seen a huge reversal in the yen over the past couple weeks, off of the highs. I think it's been a bit of profit taking there, and the fact that Abe is now kind of in the driver's seat. People are kind of waiting for his first real move. Something that's interesting to note is that commodities have continued to slide. We've been rallying for the last 3-4 weeks in the U.S. Obviously, like we said, we pushed all-time highs. Markets have been, slightly pushing higher. I mean, we haven't gone that much higher over the last 3 or 4 weeks, but commodities have continued to slide, especially copper and some things like that, some of the base metals. So it's really interesting, a little bit worrying that we're starting to get a bit of a divergence in that relative to the underlying indexes. So something to keep an eye on. This is a chart for the beginning of the year for the first quarter of all the different sectors in the local exchange here. You can see there in yellow and in gray, that's industrials in yellow and financials in gray. Totally outperforming the top 40s there in white, and then you can see the monster underperformer, which is the resource sector, and you'll be able to see that a little bit more clearly again in a second. But I'm going to show you this as well, which is really the outperformance. Just showing you in the green the outperformance that the insurers have had against the banks. So something to keep an eye on, something to monitor. It's always nice to know where the real outperformance and the strength in the market's been, and when that starts to turn, it's something to take cognizance of as well. This is the Aussie top 40. This is the ones, obviously you can see what performed well and what performed horribly in the first quarter. Some shocking performance out of some of the resources: Azor, Kumba, Amplats, Impalas, AngloGold, Goldfields. Another one of the big underperformers there's Trueworths. Then you also had some of the other retailers, ShopRite, Steinhoff, etc. But then it's also interesting to note is MTN and Vodacom, which obviously saw some big selling on Friday. That really, I think, took it to some of that underperformance on the last week. But interesting to note just how in favor, or out of favor, I should say, the resources are relative to the rest of the entire market. All right, a lot of data out today, especially heavy in Europe. We've got PMI numbers across the region. We've also got PMI in UK. We've got unemployment numbers for the entire Eurozone. Then here locally, we've got PMI numbers and we've got vehicle sales. Then we've got German CPI at 2 o'clock, and then later in the States we've got factory orders out in the U.S. I think, I think that these numbers in Europe are starting to become a little bit more important every time that, every month that we move on. They're starting to become a little bit more important because it's really, starting to spell out what the market's not 100% sure of, I think, at the moment. So just keep an eye on all these numbers. Could be very important going forward. All right, let's have a look at the maps. All right, first thing that I'm going to look at here, so let me just move the timeline back here. First thing I'm going to look at is the Aussie. We'd shown this before. We've been showing this one quite a few times recently, but I think it's important to note at 35,500. It's quite an important level. You can see this red bar is just where we've opened this morning, which we've opened below it. But it was important because we had been holding this level. I may have drawn that line a touch high. Yeah, I drew it at 35,350. But if you back out, obviously, you can see how important it is. We've just opened it up this morning. Or opened up below it this morning. It's really important level, I think, to breach, and probably is going to send us back down closer to recent lows. And it's very symmetrical how that's kind of a midpoint between the tops and the recent lows back in the end of February. So watch this closely. I'm really worried as well that this kind of looks like quite a double top formation here in the Aussie, which could take us significantly lower than where we are at the moment. All right, we're going to look at PPC. That's one we don't have a look at often. Just looking at a year chart here. Also looks like it could have potentially made a bit of a double top. Not looking terribly bearish yet, but right at $32. Major support. This is also kind of a fib retracement level from where we really broke out from, which is right here. And you can see if we do fail 32, I would look for us to at least come down and test 30, potentially even lower, potentially even support on this flag. But if we can hold 32 over the next day or two, I think it could be a place to get long in PPC. All right, Anglos. Just want to show again this level that's broken. I mean, this is just proven to be the worst stock on our exchange. We broke there at 245. We tried to get above the next day. You can see we wicked up there and tested it, couldn't hold it. We've given it up, and now we've given 240 on the closing basis as of Friday. What I think is really important, and we had pointed this out a long time ago, but we are still in quite a long-term head and shoulder pattern over a 5-year chart, and I think it's so. Bottom line is the chart in long term is still looking very bearish, and in my mind, if we give kind of horizontal support or recent lows here at 233, then I think there really could be significant downside to Anglos, and I would expect it, maybe even have another $30-40 to the downside, and it's something to watch closely. If we give the recent lows, I think there's no reason to own it if we give lows of the past year. All right. MTN. I want to show MTN. We've been looking at this one as well because there's been a lot of volatility there. We broke down quite hard. That's 164 right there in MTN, which was kind of a real support level. Obviously, we broke that. What I think is incredible to notice, if you look down here on the bottom and you see volume bars, you can see the volume that we did in MTN. Now, remember, this is I think this is value-based, but you can see we did the biggest volume that we've done. We did all the way back to October of last year, and really we did as much volume as we've done in the past year plus on Friday. There's just incredible amount of selling. Obviously, there's someone there to kind of take paper, but at the end of the day, I think the seller definitely kind of won that battle. Something to watch out for today, again, to see if that volume is still around. If it is, we've obviously broken support here. I really wouldn't be surprised to see MTN trade back down to previous lows at about 150, and that's still above long-term trendline support, which really is lower than that. If it could take a few weeks to get there, and that would put us closer to where we talked about this breakout from. That happened toward the end of last year at 140.47. So I think the target here in MTN could potentially be as low as 147 to 150. And like we said, we talked about this on Friday. If we are getting, if the market is worried that South Africa is going to do the same thing as Nigeria, then I think it's justifiable in terms of earnings. All right. Vodacom, we also talked about this one. I just want to show it again because Friday we did get a close below 110. We closed at 109.90. It's our first close below that support at 110, and that really is last level of support. We've been talking about these two levels here for a while. We really got this break below, and we did it in conjunction with MTN putting in those massive volumes, which obviously the other stock in the sector. You guys know that we've talked about 110 can really be the target there. in terms of horizontal support, and it matches up nicely to trendline support there on Vodacom. Both of these stocks, interestingly enough, really pushed a long way north of trendline support, so it wouldn't be surprising to see them come back down to test trendline support anyway. We're talking about long-term trendline support as well if we go back several years. So very, very interesting to watch. In fact, I'm going to make Vodacom as kind of a conviction call here. I really think there's zero reason to own this thing technically. In fact, there's only a reason to be short in terms of the technicals, if you ask me. All right, CFR, I just want to show as well, same sort of thing. A lot of stocks coming back to test trendline support. This is going to be really interesting and really, really crucial for the market here. The reason why I'm showing this, a lot of people have been asking, a lot of people want to buy this, and they're looking for a place to get involved. And you really can see how trendline support and kind of this and support on a flag has really kind of held or really comes in line here with where we are at the moment and where we're potentially going to open up this morning, which could be a 72, maybe a touch south. So keep an eye on this. I think just below 72 could be a nice entry here for Vodacom, for you guys that are looking for a place. Oh, sorry, CFR for if you guys are looking to get long there. All right, Investec. A lot of the banks, obviously the banks have been performing incredibly well as of recently. They sold off a bit on Friday. I just drew that really skew. But around 63.90 in Investec, INP, you can see there we've really got some major support. I think on on Wednesday we closed a touch below it here, but we regained it. And the level is still looking well intact to me. We're starting to see a few more of these patterns, or they're coming down testing horizontal support. You know, we had a major breakup from this level down here around 53.90, and when we broke out, we really sprinted hard here. We traded all the way to $69. We're all the way back down to 63.90 as real support in IMP, and I think if you're looking for a place to get long banks, it's not a bad place to have a look. And then the last one I want to show here is Apple. We're going to jump all the way back to 5-year here just to show you how entrenched this uptrend has been. You can see here at around 4.25. We've got major support, and what's interesting as well is this is the same time when you had this massive gap up on, I think that was earnings after the first quarter of the 4S came out after the Christmas season. Yeah, you can see there it's reporting in February here for the fourth quarter of 2011, and we had this massive gap up, and we literally traded in a straight line to about 640. Pull back a bit, and then we got over 700, and we've just now filled this gap. And you know that the charts like this always tend to fill the gaps. So this is, from that standpoint, I really like the potential of an entry here in Apple. I would say that the downside, maybe to look for a stop, would be closer to the round number here at 400. Close below 400, I think I would look for that to be a break of support in Apple. Okay. All right, guys, that's it for today. Thanks a lot.